Susie, today it was all about jobs.
It sure was, Tyler, and that's where we begin tonight with encouraging news about jobs. That news gave a boost to the markets and led the Dow to another all-time closing high. The blue chips rose 33 points, the Nasdaq added 9, and by gaining nearly 3 points, the S&P 500 is now within 20 points of its all-time closing high. One day ahead of the Labor Department's February jobs report, we learned that first-time jobless claims fell by 7,000 last week, dipping to a 6-week low, and surprising economists who expected actually a jump in claims. This comes a day after payroll firm ADP reported a much better than expected gain in private sector payrolls in the month of February, an increase of 198,000 jobs. Here's Hampton Pearson with a closer look at whether that encouraging data points to a better jobs market.
In the nation's capital today, a sure sign of spring and perhaps an improving job market. A sightseeing tour company looking to fill 150 vacancies hosted a jobs fair with lots of eager applicants.
I have a lot of experience. I'm well qualified for this line of work, and I've got a good set of references, too.
While the drop in weekly jobless claims and increased private sector job growth is encouraging, it's those higher taxes and deeper spending cuts from Washington that could slow down the job growth momentum. Healthcare has been the biggest job growth engine, up 320,000 in the last year. Construction is on the rebound, adding 28,000 workers in January, the fourth straight month of big gains. In contrast, government workers continue to lose jobs, particularly at the state and local level, down by 24,000 just in the last 3 months. And layoffs are on the rise, up 55,000 last month, according to consultants at Challenger Gray and Christmas, the second straight monthly increase. The trade deficit topped $44 billion in January due to more imports, $6 billion higher than December, and a possible drag on economic growth in the first quarter, with a downside ripple effect, economists say, on job growth in the coming months.
We're going to have a second quarter dip in employment, not a decline in employment, just a slowdown in the pace of employment in the second quarter of the year, bring it back down below 150,000 workers per month.
So tomorrow, when we get the jobs report here at the Labor Department, economists predict we probably added about 160,000 jobs to payrolls last month, just enough to keep the unemployment rate at around 7.9%. For Nightly Business Report, I'm Hampton Pearson.
All right, let's dig a little deeper into the labor market as we look ahead to tomorrow's number with Diane Swonk, Chief Economist and Senior Managing Director at Mesirow Financial. Diane, always good to see you.
You too.
You just heard Hampton put his numbers on what the probability is for tomorrow, about 165,000 jobs and about a 7.9% unemployment rate. Where are you? What's your forecast?
Well, certainly I was there in the beginning of the week, but I think with the preliminary jobs numbers we saw from ADP and some of the consumer numbers that we've seen come out, the consumer confidence numbers, which across the board have shown people more optimistic about the labor market in the month of February, I think we could easily get closer to 200,000 and be surprised pleasantly on the upside for a change, which would be welcome news at this stage of the game.
But, Diane, there's still a lot of pain in this job market. There are 12 million Americans who are out of work. These are the long-term unemployed. And if you look at that measure of the U6, I think they call it, 15% is the unemployment rate. Teen unemployment higher than that. CEOs we talk to really not in the mood to hire. So what can you tell Americans about the health of the job market?
Well, what we're seeing is it improve, although the threshold is easy to clear because it's been so lousy for so long. And what we're talking about is still a very long slug going forward. And I think the intro is really important because what we're looking at is what could be a turning point in the job market where we see much more measurable increases in employment and a whittling away of the unemployment rate. That could, though, be derailed by what's going on in Washington right now, particularly in the second quarter. Much of the furloughs and layoffs are likely to hit in the month of April, which we won't see in the jobs numbers until they're reported in early May.
And yet government payrolls are going down, even as private payrolls are going up. One area that I'd like to hear your thoughts on is incomes. You know, we've got some job growth in the economy, but we have very, very tepid income growth. Why isn't anybody getting a raise?
You know, that's because one of the ongoing slack in the labor market, you got a lot of competition for jobs out there. You've got a lot of people willing to take any job you've got, but also there's been a shift in the composition of where we hire. We're seeing in the healthcare industry, for instance, although hiring is still very robust, they're cutting nurses' wages and substituting, in many cases, high-paid nurses for lower-paid tech personnel who have an 18-month degree. They're paid better than other people with an 18-month degree, but much lower, of course, than nurses. And so you're seeing a lot of shifting going on where high-paid personnel are often traded off for lower-paid personnel, even in the healthcare sector, which has been the job generator and one of the bright spots in the overall labor market for some time. The good news is we do have construction coming back. Those are high-paid jobs, and manufacturing, but not in the volumes we saw, of course, during the height of the housing market boom or in the manufacturing sector of what we saw in the past.
All right, and anything that you can say about small business versus big business? We did see in the ADP report that small businesses continue to hire, but what about bigger companies?
You know, that's really important is that small business in the ADP report, because it's a payroll service company, tends to catch new business formation as well, which isn't always captured in the government survey until later. So that is actually encouraging news that there might be more business formation out there than we're actually capturing in the official data, and we'll get it on later revision. So that's good news. The bad news is what you heard on the Challenger report, that not all big companies are hiring, and that's where the hesitancy has been at the large corporations.
Diane Swonk of Mesirow. We'll find out the numbers tomorrow. Thanks for being with us.